I want to share with you something that took me almost a decade of being a bank on yourself or infinite banking concept user. And I want to go through that with you. This was something that as I was going through a plan with a chiropractor client of mine, all of a sudden a light bulb went off, and he and I right there on the phone went through this, and then I drew up the numbers and showed him, and he was like, wow, this is incredible. And so I want to share this with you. As you know from my YouTube channel and multiple books that I've written, I am a big fan of properly built cash value life insurance. There's many reasons for it, but being your own source of financing is the thing that really caught my attention back in my 20s. And now that I've been doing this for, gosh, almost 12 years now, and have clients all over the country putting money into these plans, anytime I come across something new, I get electric. I get excited, and so I want to go through this. Most examples of being your own bank or the infinite banking concept show you purchasing a car and 4 to 7 years later paying it off over time, and it's going to continue to grow. And you're going to make that payment back, and maybe you're going to pay yourself extra, maybe you're not. If you're a business owner, you might get a tax write-off. If you're not, then you don't. So there's a lot of things that people have been teaching, that I've been teaching. But one that I have been telling people for many, many years now is to, once you sell that car, take the proceeds and don't put it onto the next car. Don't reinvest that into the next car, because what most Americans do is they're trying to lower the payment on the next car that they purchase. But you're already accustomed to that payment, and so when this light bulb went off for me, it was like, okay, wait a minute. What if at the end of paying off a car, I had $20,000 left on that car, and I don't want to sell it, or maybe I do want to sell it, but what do I do with this money? And most people, again, they roll that on to the next vehicle. And if you have capacity inside of your plan, then my greatest suggestion is that you dump that into your plan, because you can borrow it right back out, right? And I'll go a little bit more detailed as you and I speak or work together on what I do with my own money and how I leverage a credit union for between 30 to 90 days on car purchases while I get my next plan up and running. But if there was $20,000 and you put that onto your next car, you've just put that onto a depreciating asset. But what if you could put that into something that appreciates and has compound interest and has earned over 5% for many, many decades? Check this out. If we took that $20,000, 5 years into this, now we've grown that to $25,000 plus. And in 10 years, over $32,000. And in 15 years, almost $42,000. In 20, $53,000. By the time we get to 30 years, that $20,000 that certainly would have been completely wasted and the value lost by putting it into another car, we've put that into our plan and let it compound for 30 years in a row. That $20,000 is going to be worth $86,438. And you're not going to owe any tax on that. And there's not any risk that you're going to lose that down the road. Okay? And you can borrow against it. You can take a stream of income off of it. Compound interest is powerful. But in the industry, we've been showing people just to pay that off, and we don't show them what to do with that money once they sell the car. This is what you do. And if you don't have the capacity, you're going to mech your policy, then we can open up another policy, and we go through that. We wouldn't do one as a lump sum or anything like that, but we could set up a system over a number of years to create that for you. But this is just powerful stuff, and I wanted to show that because compound interest is such an incredible tool, and right now banks pay such little interest that we've forgotten the power of compound interest. We've forgotten the power of legally avoiding taxes, and we've forgotten the power of avoiding market loss. So, hey, my name is Stephen Gardner. If you have a compound interest success story, please share it below. Otherwise, subscribe to my channel and click the bell so you're notified of future videos. If I can help you in any way or answer any questions about this, leave them here in my YouTube channel or send me an email at steven@yourbridgeplan.com. That's Steven with a PH. Hey, thanks for checking out today's video, and let's get your money compounding.